Equity markets were strong in April as fundamentals boosted returns, such as earnings reports were very strong, as well as the economic news. Bond markets in Europe were also quite strong as the German bond market outperformed as investors sought out safer assets in Germany. Despite this, investment funds year to date have had a very lacklustre performance and are marginally negative year to date. This is as a result of the strength of the euro, which is now trading back to summer 2008 levels. Commodity markets are also quite strong in April, particularly the precious metals sector, as gold and silver are now trading at all-time high levels. In April, we saw the S&P put the US rating on negative watch for the first time in 50 years. This will force the US governments to deal with their large deficit, which is expected to be 10% of GDP in 2011, sooner than markets had been anticipating. Fundamentals for equity markets have continued to improve since the start of the year. Economic data has been much better than people had initially expected. Growth in the US came in line with expectations, but shows that there was a strong recovery in both businesses and consumer spending, although there was some weakness in government spending. The labour market in the US, which is usually a lagging indicator for the recovery, is also improving as the unemployment rate has dropped from 10% at the start of the year to 8.8%. This recovery in economic data has been seen in the earnings reports, as the earnings that came in for the first quarter have been much stronger than expected. This has been driven by an improvement in sales, which have grown faster than revenues during the quarter. Bond markets are also volatile. Particularly, we have seen a lot of volatility in the German bond market since the start of the year. Most recently, it has benefited from some risk aversion. The ECB has started increasing rates, which is usually negative for bond markets. However, a lot of the rate increases have already been priced in at this stage. Peripheral bond markets have also been very weak. The spread between the Greece, Portugal and Irish 10-year government bond over the German 10-year government bond is now at an all-time high level. This is as a result of speculation that Greece may have to restructure its debt, possibly extend the maturities of some of its bonds sooner rather than later. Also, Portugal became the latest country to enter the IMF EU support system. On the other hand, Spain, which was considered one of the peripheral countries, has managed to disassociate itself and has not seen the spread widening that has been seen by the other peripheral economies.